Welcome back. Time for 3 Stock Lunch. FedEx reporting after the bell today, Intel getting an upgrade, and a bullish call on Nike. Our team of reporters has the news and moves today. Then we'll trade them with Danielle Shay, VP of Options at Simpler Trading. Welcome, everybody. Let's start with FedEx. Hi, Frank Holland. What's the story?
Hey there, Kelly. Let's look at FedEx right now. FedEx share is moving higher today after a Stifel upgrade. It's also outperforming its rival UPS, as well as the Dow Transports year to date, as the delivery giant undergoes a massive cost-cutting effort. Investors and analysts are listening for any updates on the $3.7 billion FedEx guided it will cut this fiscal year. And this all comes ahead of an event on April 5th in New York City on what it calls its Drive Transformation Initiative. Well, here's what you got to know. FedEx is a fixed asset network. So the question will be if the cuts to flights for its express air delivery, worker hours, and more will be enough to achieve this goal of cost cutting of $3.7 billion. FedEx estimates have revenue declines in the low single digits, EPS falling by about 40%, but that's already priced into the stock. This stock often trades on margin. Estimates are for a major margin contraction for its express division, where it gets about half of revenue. But if FedEx can cross that very much lowered bar, it will be an encouraging sign that their transformation plan is on track. Kelly, back over to you.
Okay, thank you, Frank. Danielle Shay, you going with FedEx here? You think they'll deliver?
Yes, Kelly, I do. I'm bullish FedEx, and I agree with everything that he said. I think that looking at the chart right here, traders could do something like sell premium prior to earnings to take advantage of implied volatility crush, or they could trade it to the upside. I'm targeting 220, 230 on FedEx, and I think it's a turnaround story.
All right, let's go on to Intel and Christina Parson-Evelis. Christina.
Well, this Susquehanna upgrade for Intel is really a bet on the strength of the U.S. economy. They're calling for the bottom for smartphones, PCs, and other consumer-related products, citing improved inventory levels and improved early demand. But Intel and other PC-exposed chip names are the economically sensitive part of the tech universe. You need to be really optimistic about global growth if you believe this call. The analysts argue that AMD isn't stealing as much market share from Intel, but keep in mind you got Intel's dismal but reaffirmed first quarter guidance of $10.5 to $11.5 billion in revenue. That's a 40% decline year over year expected in this current present quarter. Yes, the dividend was recently slashed almost 66%, and the job cuts keep growing, so costs are coming down. But the upfront cost to build up fabs and the prolonged cyclical weakness, should interest rates keep climbing, could remain an overhang in this name. Nonetheless, the stock is up over 5%.
All right, Christina, thank you. Danielle, what's the trade here?
So I'm bearish on Intel, but I will point out that it does typically trade higher prior to earnings. So I wouldn't want to short it right here. And I actually think that if it traded a little bit higher, another $1 or so, it would be an even better spot to short it. This is because after earnings, historically, it falls the last 7 out of 8 quarters. That's exactly what it's done. Last quarter falling 10%. So I think that it makes sense to short it around $31 a share and trade the longer term trend to the downside.
To the downside. All right, so that's one up, one down. Let's see how we go on Nike first. Let's get the details from Melissa Repko. Melissa?
Hey, Kelly. So ahead of Nike reporting next week, there are some clues that activewear may actually be a more resilient category than expected. The question is, does that carry over for Nike too? Dick's Sporting Goods, which carries Nike, posted a big beat on its holiday quarter, and Lululemon, a competitor, had raised its sales forecast for the fourth quarter. So it may indicate some of those pandemic patterns may be stickier and lifting Nike's sales. On the other hand, Nike faces some heightened markdown risk. One factor is Nike's inventory was up 43% year over year at the end of the last quarter. Nike said that was its inventory peak, but still lots of excess merchandise floating around, and that does make it a more promotional environment. And then last but not least, there's a geographic dynamic at play here. In the U.S., we've heard a lot about a slowdown of the consumer. In China, another big market for Nike, they could have a recovering consumer that's more out and about and revenge spending as the country opens back up again. So it will be interesting to see how those two dynamics shake out with its earnings.
All right, let's see what Danielle thinks. Melissa, thank you. What's the trade here?
Kelly, I'm bearish Nike. I think that overall the consumer discretionary sector is in a downward trend. If you look at the weekly charts, it's just not looking good for XLY or Nike in general. So with Nike, what I would like to do is I'd like to short it right around the 125, 128 price point. But I will tell you that I'm wrong if it breaks up above 130. So that's where I'd have my stop.
Interesting. All right. And I don't like that